Hey, good people, happy Friday. So the week has come to an end here, and for monthly expiration week, quite the week. So a lot to cover here. We'll take a look, obviously, at quick update here on some of the swing positions that we've been covering, really for the last couple of weeks here, in the weekend prep videos, during the live prep sessions, and obviously if you're over here, it's simpler in the options room or any of our other rooms. We've been all over this stuff. So we'll take a look at the Amazons, the Apples, the Netflixes, Teslas. But in terms of the market itself, a lot of interesting stuff here. So the S&P just a total chop fest this week. There's a lot of selling pressure under the surface that I think Amazon and Apple. Here's the thing: when two stocks that are so heavily weighted, like in Amazon and Apple, are just kind of ripping face here, that can mask a lot of selling pressure taking place in other spots. So you look at technology here, obviously Apple, Amazon, Google, etc. You hit a brand new all-time high today. But if you look over here, say at the small caps kind of like just, steadily fade here for the last 2 or so weeks. And we're actually pulling back to a pretty, I think, important level there. If you look at the always incredibly exciting Dow, that's kind of coming in as well here. Check out energy. Now we're going to cover the spots that have worked here, but I did bring to you energy as a pretty good looking daily squeeze. Starting to lose some structure here. So the important observation is compare this daily squeeze to Apple, to Amazon, to Tesla, etc. They all have positive histograms. And I'm not sure if I noted this, and if I didn't, shame on me. But during that consolidation phase, ideally you want a positive histogram. That is your potential heads up. Momentum is shifting. Squeeze could fire to the downside. So how much are we down there today? So S&P 500 is flat. Energy's down 4%. Financials down 1%. Again, same observation. Shift of momentum in your histogram. Now, quite frankly, I don't personally think the financials and energy enter a downtrend. Not to go off on a weekly chart tangent, but you have one of the better uptrends in the market on your weekly chart here for the financials. So a little bit soft here this week. Weekly structures, picture perfect. Stacked EMAs, you have a squeeze. You should hold here to 21 EMA. If you do, I think that's where you want to get long. The dip to the 21 on the weekly, that's been money all year. Not to say it is this time. But financials down 1%. Let's keep going through the list here. Semiconductors, that's a crazy trend. So they're up about 0.5% today. The industrial's down a bit, not the most exciting spot. Let's see, transports. Alright, transports. Let me come over here. I got to put that on the watch list. We'll take a look at this new daily squeeze together during Sunday's prep video. But they're kind of flat here today. We can make it simple. RSP, equal weighted index. Now, it's not breaking structure here, but just trying to drive home the point. There's some selling pressure here. Not to a crazy magnitude, but there's some selling pressure here taking place that you can't quite see looking at the S&P 500 because it's basically the Amazon, Apple, go-go. And not so much Google, but Apple and Amazon so heavily weighted. They're holding things up here. So I don't think the market's going to flush. I don't think the uptrend is over. And regardless of selling pressure in a few different spots here, you focus on structure and squeezes. Weekly squeeze here for the S&P. Just started firing long. Weekly squeeze here for the QQQ. This is week number dos. Week number 2. So, to me, the structure here, and granted, this doesn't unfold potentially without a couple of dips along the way, maybe a week or 2 weeks of consolidation. But taking a point A to point B kind of look at things here, we're at point A. I think point B is somewhere higher because of the weekly squeezes into December, January. So, your financials might look a little sloppy, your energy, etc. But you have Amazon with a monthly, weekly, 3-day daily squeeze. I think get ready to go here. Then you have Apple, talking to Sam from the options room, maybe with a gamma squeeze type situation here. So, with this in mind, at this point, the weekly squeeze on Apple, which we've covered over the last couple of days, not that it happens immediately, and not that, again, it doesn't happen without a pullback or a consolidation, into the end of the year, into January, all the potential in the world here, in my opinion, and I'll jump back on the mic when I think I'm wrong, 165, 170 plus. Now, I can't suggest you get long Apple at this point, because you're chasing it. So even if I think we're going higher, this isn't the best entry. So trying to reinforce the principle and the fundamentals here. You find an uptrend, you find a squeeze, you build your position at the 21 EMA, or as close to it as possible. Ideally, hold on guys, I think my microwave is going in the kitchen here. Be right back. Alright, thought I heard something in the kitchen. A couple of glasses of wine, start getting a little paranoid. Where was I here? Yeah, find an uptrend, find a squeeze, get long at the 21. That way, once the move unfolds, you're not chasing this crap. Rather, you're already bringing home the profits. So I think we're going to go up to 165, 170. You get long here, the buyable flush to the 8 EMA to the 21. Be prepared for that. Make sure you're structuring a trade if you're going to chase here, where you can comfortably sit through that flush. Realistically, I don't think you don't want to get shaken out of a swing trade here on Apple, in my opinion, even down to the 50. That's how much potential I think the weekly squeeze has. So wait for a dip there on Apple. Amazon kind of came in a little bit today, but monthly expiration kind of shenanigans, I think. But here you have your monthly, your weekly, your 3-day, your daily squeeze. Wait for a flush. It's just tough to build a good position at this point. We're trying to do it back here a little bit closer to the 21. Now you're profiting on this move. You have open profit now. So if the thing pulls back a little bit, you have a totally different, set of emotions. If you're getting long back here, and then it dips a little bit, versus if you're getting long up here. So we were talking about this in, I think, the training room and the options room today. I think a lot of traders, newer traders, right? Especially when you learn something like the squeeze, I think it's very easy to interpret and understand. And I think a lot of traders can look at Amazon and say, okay, I understand the squeeze, and there's squeezes everywhere. And I think a lot of traders can kind of see, this has potential for a move into, call it, 4,000. A lot of these bigger picture moves, you can kind of see them a mile away. They don't sneak up on you, and it's not like it's a surprise, so to say, once it unfolds. But so many traders, I think, don't actually catch the move that they call, and the move that they think will unfold unfolds, and they're not catching it because they're taking awful entries. Meaning, you get long Amazon up here, you get your ass shaken out on that little flush, and then the move you're looking for unfolds. Or you get long up here, you can't really hold on because you can't take the pain on that flush from +3 to the 21. So you're getting shaken out, you're getting stopped out, you're getting all kinds of emotional. And then lo and behold, a week later, 2 weeks later, there's Amazon firing the weekly squeeze. So at least what I try to bring to y'all and what I do in my own cash here, super simple stuff. Anyone can do this. The difficult part and the part you have to master is controlling those emotions. So when Amazon's coming in a little bit, and it might look a little bit soft, and anybody who chased up here is taking some pain, there's your buying opportunity. Not up here. Not when it feels safe, not when it feels strong, not when every breakout scan has Amazon on it, not when everyone on Twitter is hyping up Amazon. Because that little shakeout, you don't want to be a part of that. So, tough to suggest an entry here, but in the event you do get a flush, I think you quickly nibble on some Amazon here. Quickly moving on here to Netflix. Now here's one you can nibble on. You're right at the buy zone just above your 21 EMA. Good uptrend, good daily squeeze. We built our initial position on that initial flush, and we're probably going to look to add here if we end up back at the 21 next week. So I think a good looking daily squeeze, one of the better trends out there. Locked and loaded as far as momentum goes. I think the daily squeeze has potential to get you into about 715, 720. So look for a dip there, and then another spot to look for a dip on is Tesla. So pretty extreme moves here, but we'll talk more about this on during Sunday's video as far as options pricing. But it's all normal. It's crazy, it's extreme, but in terms of the ebbs and flows of a good trend, it's all normal. You built up energy at your 21 EMA. You made a huge move off of 21, got a bit too extended, and you pulled back to the 21. Reversion to the mean. We held structure, didn't break down, still have stacked EMAs, still have green 10x bars, didn't change anything as far as the structure of the trend. So here's your buying opportunity back at the buy zone. Pretty strong here into the close today, so we did take a smaller position, about 4% risk, on a December monthly expiration credit spread in my mastery. And then JC's got the options room in a debit spread here. Me personally, looking for a move back towards 1200, then a move into a brand new all-time high. And I think you give that a few weeks. So see if that comes in a bit here early next week. Or you can buy it here as long as you can comfortably sit through a flush. That's my opinion. But let's see, some Netflix. I got a little bit of open profit here. And options room, 650, 645, credit spread. Mastery, 620, 615. Amazon. Amazon. January expiration. And these are all at about 50-ish% of max profit. Options room, 3400, 3370 put spread. Mastery, 3350, 3340. And then for Apple here, options room, December 31st expiration, 150, 145. Mastery, January 21st expiration. Similar trades here, right? 150, 145. And then today we picked up some Tesla. And for Tesla, we're going December 17th, just about 30 days out till expiration. And we locked in about a 2-to-1 risk-reward ratio. Selling this a little bit earlier in the session, 10-20, 10-10. So that is what we're rocking with. The Amazons, the Apples, the Netflixes, the Teslas. They got good trend, they got good structure. Your job is to patiently look to pick your spots wisely and build a good entry. Then you got to have the discipline to sit back and let things unfold. So I'll be the first one to jump on the mic here if and when these things break down and lose structure, and it's looking like they're not going to unfold in my favor. But as of right now, I think Tesla back towards a brand new all-time high could be in the cards. I think ultimately Amazon's weekly squeeze, getting that towards 39,400, 4,000 rather. Possible. Apple 165, 170, Netflix 715, 720. That's my opinion for now. And again, that doesn't happen immediately. That doesn't happen potentially without a dip or some sideways chop. The dips, the sideways chops, I think just offers an opportunity to get a little bit more cash to work in a few of these names. So that's what I got for y'all. I hope you had a good week, and good to see in the comment section from the video I posted yesterday. Seems like a handful of you are taking action on some of these ideas. So remember, it's your cash. You got to manage it however you see fit. Accept your own risk. But when my brother and I put these videos together, obviously, we're looking to bring you actionable opportunity. So I appreciate you being a subscriber. Talk to you in Sunday's prep video.